McCowan. I am responsible for the general insurance product portfolio within Post Office Insurance, and I also look after pricing and data science. What was the major impact we expected? We expected new business prices to rise, renewal prices to come down as a result of the measures introduced by the FCA. By and large, that has happened, but perhaps not to. So, for example, new business prices do not appear to have risen by the quantum many were forecasting. And in the end, I think what seems to have happened is that it's benefited retention more than new business. So the market is grappling with a big challenge, which is customers have ended up staying with their existing provider in greater numbers than was anticipated, I think is the answer. Now that's interesting because of course what it means is, oddly, sort of those businesses that had large back books before, where the FCA had talked about creating movement away from perhaps those people that had benefited from price walking the most, have kind of kept those customers. and to some extent that's sort of understandable, right? The benefit for moving now, the difference between new business and renewal prices are much, much closer. But that is a challenge for lots of businesses, including us, who want and need new business growth. So it's a very interesting market. It undoubtedly is, without question, the new system of regulation is fairer. There's no doubt about that at all, right? And where businesses were making higher margins on renewal customers to fund, new business investment, that has stopped by and large. So in that sense, it's created a fair outcome for customers. I think the truth about value is that the insurance industry gives a lot of value to customers all the time, right? These are not products where in the round you are making any kind of definition of super profits. We have, as an industry for a long time, looked at value in terms of both margin, product quality, claims ratios, claims acceptance rates. We've been looking at those as measures, or good businesses have been looking at those measures for a very long time to make sure that customers are getting a product, a service that is good, that is reasonable. So I think the answer is that the enhanced regime, which of course we have to remember wasn't just about pricing, it was also about being able to demonstrate to the regulator, to your board, an enhanced oversight regime around the quality and value of products. That is a very good thing, I think. I've come from a number of businesses that have done that for a very long time. It's possible, I suppose, that not everyone was doing that. So creating a level playing field around that kind of behavior, I think, is a really, really good thing. But these are products where, combined operating ratios in home and motor are in, usually the high 90s in motor. They're often, there've been years where they're above 100. So these are not products that are not servicing customers' needs, that are not paying claims. But yes, I think that the overall oversight regime means that customers will, I think, get even better products, even better services, and that can't be a bad thing, can it? In the round, has value been returned to consumers, right? I think it is absolutely true that renewal prices are cheaper. So, but new business prices have gone up because, of course, the regime was to peg the two together. In the round, does that mean that? I think it probably does mean that money has gone back to consumers, but I'm not sure that was, in a big quantum, I'm not sure that was ever likely to happen. As I say, these are products that operate at quite high claims ratios, combined operating ratios. So there wasn't huge amounts of money in the round necessarily to go back. There will be from those providers that were perhaps at the sharper end of practices and pricing with renewals. But I think what's happened is there's a level playing field for pricing. Customers will no longer see a big differential between the renewal price they've been offered and the new price available. That will mean that money's been returned to renewal customers, or they are being charged less for renewals. And it probably means that new business prices have gone up, and that is undoubtedly fairer. And that was what the FCA was seeking to achieve. we are all experiencing lower demand at new business because customers' renewal offers are more attractive to them. And we're all, I mean, that means we're all benefiting too from better retention rates. We're certainly seeing that. Whether that is, so that is true. The underlying dynamics, so for example, there's less shopping, but still in home and motor, the vast majority of that shopping is through price comparison websites. For example, where customers are looking, yes, for product quality, but at a price they can afford to pay. So price is still a really important factor in the buying decisions of customers. So I think it's changed the number of customers right now looking to swap. The underlying market dynamics, not particularly, I think, in terms of distribution. Clearly, this year is going to be a challenge for many consumers. It's also going to be a challenge for insurers because, you know, inflation will hit supply chains. We're already seeing delays in supply chains around car parts. That is affecting new business too, right? So we're seeing delays in new cars being delivered. That's changing buying behavior. So, but as you know, I think it's a fair shout to say that as the cost of living increases, as inflation hits, that probably will make people, you know, again, even more price sensitive and may well drive an increase in shopping over time. And we'll all need to be ready again to offer, you know, fair prices, new business versus renewal for, you know, probably a bigger group of consumers who are looking to save some money. Those companies that were using what the FCA termed as inducements will be less able to do that because, you know, fundamentally, the basic principle is if you're giving new business customers, I don't know, something that's free for 30 quid, you've got to give that to your renewal book. In most cases, that will be unsustainable, right? So those things are not available. Again, I think I'm almost of the view that for customers, as much as the reform on price was important, actually, I think the measures around really entrenching this notion that any product or service you give a customer must demonstrate fair value. And actually that definition of fair value is not just about price. It is about, is it a good product? So, you know, you should not be selling a product that you know is going to have a low claim rate. You know, that just is there to generate margin. Now, I don't think there's a lot of that going on in the industry, to be clear, but it does mean that our focus is as much on whether or not the products and services we are offering consumers give them what they should have, right? That are there for them at their moment of need, delivering a good service. And that is really, really important. It's really important to make sure we certainly take that incredibly seriously. We monitor, you know, we must monitor something like 50 or 60 KPIs that are sort of service and customer led every month in a kind of formal process where we are challenging ourselves and each other. Are our products really delivering for customers? And I think that's a really important aspect of the reform that, as I say, has been part of, you know, my background is I was at BGL, I was then at Hastings. Those are businesses too that took that kind of thing very, very seriously. And I hope that that is now entrenched market wide and should mean that customers are continually getting better and better and better products and services. Those sorts of fundamental market dynamics, as for the moment at least, haven't really changed, right? So those customers that are shopping are largely shopping through price comparison websites, and they are, you know, largely shopping for a product they can afford. Although I think the PCWs increasingly do a better and better job over displaying product value and features to help customers make an informed choice. So, so those fundamentals haven't really changed yet. And the truth is, for me, I don't really in the medium to long term expect them to change. I think what will change is I suppose, we're going to have an anniversary of price changes in January. We're going to have the impact, as we've talked about, of inflation. I suspect that means that the number of shoppers will fluctuate, but probably get bigger over time. And we might not return to pre-change demand, but I think we will see an increase in demand. The pricing sophistication that we have to look for, and there's always a balance with pricing sophistication if doing too much, but I think it reinforces the need for better and better predictive models, better and better market modeling and market monitoring to allow you to trade in the market you're in the moment, if that makes sense. So there's a kind of, you're going to have to, it's going to be a really tough balance, right? Because you've got to be able to react, but we're in a longer price change cycle because we're pegging new business to renewals, and you inevitably have to wait to see the impact of a price change. But I do think that, you know, certainly how we approach it, that continual focus of, you know, really making sure that you are modeling for the market you're in today, will be increasingly important to make sure you can keep up. I think it's unlikely. I mean, there's a lot. There isn't, price walking doesn't exist in the same way in travel. Much of the market, of course, there is a kind of annual product, but there's much less renewal behaviour in the purest sense in travel than there is in the other products. So I think that what the interesting thing, right, is that the truth is we got ourselves in the situation where the regulator needed to intervene, right? As a market, you know, we knew, you know, there was a you know, cheap new business, higher renewal prices, right? You know, there's a sort of dark secret that no one will talk about in the, you know, in, you know, Leadenhall Street or Fenchurch Street. We got ourselves sort of in this position. So my advice to those pricing and selling travel insurance is don't get yourself in the position where the regulator needs to intervene, right? So, but it's not a kind of, it's not a behaviour that that you see typically. So I suspect it won't. Well, fair value already, the fair value regime did exist for all products. It's not, that wasn't just home and motor. It's just that home and motor was the only products, they were the only by and large products caught up in the pricing element of the reform. Again, the majority of the market care about their customers and are doing good things, right? And they are monitoring, so take travel insurance, the majority of providers are making sure their products and services deliver for customers, and give them the cover and the protection they need when they're most vulnerable. So, you know, I think it's, my view is, I don't think the regulator needs to intervene in travel. The fair value mechanisms exist for all products. I think that's a really good thing. It makes sure that every business is not just looking at margin, they're looking at whether or not the product or service delivers for customers for the margin they're charging. I think that's a really important and welcome reform.